Good morning, everyone, or good day. Those in a different time zone. Thank you for joining today's webinar, the first in a two-part series led by the BAFT Future Leaders Class of 2025, and the inaugural Future Leaders session since their graduation at the Global Annual Meeting in Washington this past May. For the smooth running of the event, all participant microphones are muted. Please submit questions at any time via the Q&A button at the bottom, and our presenters will address them at the conclusion of their remarks. This session features two project themes, the Correspondent Banking Operating Model and BRICS. Before we begin, we will screen a brief video entitled Where Are They Now?, compiled by the project team that analyzed the nearly 300 Future Leaders alumni. Thank you for your participation, and let's start the video.
So Rita and I were at a dinner. We were sort of sitting in an area that was a little elevated above the rest of the room. And one of us said to the other, "There is a hell of a lot of gray hair in this room."
And I said, but the global transactional banking future really depends on the future leaders that comes after us. So we have to do something about it. And Craig said to me, well, why don't we form 30 under 30? And I said, bingo, that's a great idea.
So that was where this came from. We said, how can we, BAFT as an industry body, help our member institutions to make this business more interesting for the next generation? How can we help support our members, support their individual development? And that became the origin of the Future Leaders Program. 10 years later, here we are. I would say my goals are, one, to make sure that our members are happy that we're supporting the development of their future talent. Second is, I'd like to think that we can help that generation build a network that's going to help them succeed as they go through their careers.
So Rita and I were at a dinner. We were sort of sitting in an area that was a little elevated above the rest of the room. And one of us said to the other, "There is a hell of a lot of gray hair in this room."
And I said, but the global transactional banking future really depends on the future leaders that comes after us. So we have to do something about it. And Craig said to me, well, why don't we form 30 under 30? And I said, bingo, that's a great idea.
So that was where this came from. We said, how can we, BAFT as an industry body, help our member institutions to make this business more interesting for the next generation? How can we help support our members, support their individual development? And that became the origin of the Future Leaders Program. 10 years later, here we are. I would say my goals are, one, to make sure that our members are happy that we're supporting the development of their future talent. Second is, I'd like to think that we can help that generation build a network that's going to help them succeed as they go through their careers. And third, very selfishly, is I'd love to see these people, 20 years from now, 30 years from now, being in love with BAFT the way our members are in love with BAFT, who have been doing this for quite some time.
So what I found fascinating was being surrounded by like-minded, ambitious, and interesting people. We all had so much in common, yet very diverse in our perspectives. I couldn't make it through the lobby to my room without meeting so many friends from the prior years. So absolutely, I've been so privileged to make friendships that have lasted a decade plus. I've found myself sitting across my future leader alumni friends in many business meetings in various parts of the world. some of the skills that I hope that the many classes post my graduation and in the future glean from this program is find your people, surround yourself with successful people, seek out mentors, seek out the peers that will grow your own network.
My experience in last year's Future Leader Class helped me develop as a leader. I was able to stand on my own 2 feet and to be able to drive initiatives within the bank. As a result, I wanted to contribute to someone's journey through the mentor role, and I sincerely hope that I have positively influenced this year's class of 2025.
There are multiple reasons why I love working in the transaction banking industry. I loved it from the first day I joined and I still love it today. Every day is different, so it throws up its different complex challenges. Being in the sales side of things, I love closing a transaction and the buzz and the feeling that gives to you. And finally, just the people. It's great to see them at industry events such as BAFT, and that really does make the difference.
For me, the most important part of BAFT is the networking, and it's the community you start forming afterwards. The amount of connections and visibility you get, I think that's the best added value of the program.
I have excellent memories and still in touch with some of my team members actually in Asia, because actually one of them is in Singapore and the other is in Hong Kong, and I'm still sometimes having a look at what we wrote because they are still very relevant information. We're dedicating time and time of experts, right? Like people specialized in transaction and transaction banking to explore topics that were not necessarily mainstream at that time.
Sky's the limit, right? And the future of the program, as I said, I'm great to see that it's still happening. That people like you are participating, that the brightest are participating into BAFT Future Leaders program. It's invaluable, the experience you will get, and so I wish you all the best on your future journey.
So we started to talk about what are different organizations doing to help not only build a pipeline of talent and leadership in the industry, but what are we collectively doing to try to make the industry interesting for people who at the time were seen as being much more interested in going down a technology track or fintech companies and things of that nature. The pandemic obviously was difficult for everyone. We had to really rethink how do we do everything. And so the Future Leaders Program, one of the benefits of it is that it is largely virtual. So we thought we could continue to deliver the programming, but the difficult part for those, I think, 2 program years was that they weren't able to meet in advance.
When I went through the program, our topic was my biggest challenge. We were looking at distributed ledger technology and transaction banking applications. And the most important takeaway from that experience was that I wasn't there to challenge or disagree with my cohort. I had to challenge myself to look for meaningful solutions for our industry. Another significant takeaway was being open to challenge and being able to accept that my personal views and opinions can and should be challenged. Being flexible when warranted, conscious of impact of how my perspective can hinder or foster finding the right solutions.
So the person to be motivated. Transaction banking within FIs, it's about expertise. So future leader must show that they are experts, they can share their expertise, they can bring a better expertise listening to the others. So technical expertise is one key goal from future leaders.
The most successful companies will be those who can train young people who are starting their careers and figure out ways to build team morale when people are now sitting globally and may not be together in a way that we were traditionally.
A good balance between understanding the underlying flows and what the business is all about, but at the same time also has got deep knowledge with regard to the technical side.
It's about more bringing people together and making sure that everyone feels valued and encouraged to share their ideas.
I'd like you to be ambassadors of BAFT and ambassadors of the program.
Over the past decade, the Future Leaders program has built a strong foundation. Now we look to the future. We have asked the leaders of today and tomorrow to give their views on the future of the program and the transaction banking space in one word.
Exciting.
Expertise.
Sustainability.
Better.
I would say inquisitive.
Limitless.
Community.
Promising.
Engaging. Fun.
Go for it.
Thrilling.
Can I take the opportunity to just pass a message to all of you in the Future Leaders Program for 2025 and others to come. My strongest recommendation to all of you and your senior executive sponsors is to fully embrace the opportunity to be a member of the Future Leaders Program. You will make a difference at a personal level. You will change your career, guaranteed, and collectively is the future of the industry. So take it serious, because it has that potential. All the best.
Thank you. And with that, we will continue with the correspondent banking group. So please turn on your cameras. And for the audience, please use the Q&A button to submit your questions.
Good morning and good afternoon, everyone. Thank you for joining today's webinar, where my colleagues and I will be sharing our methodology and key insights from our research into correspondent bank operating models. To begin, may we please proceed to the first slide? So we understand today that correspondent banks are influenced by new regulations and policy changes, in addition to trends set forth by industry leaders with a common goal of maintaining a competitive advantage. Our group has worked to identify the most prominent and efficient correspondent bank operating model. To achieve this, we have defined the traditional model and analyzed each of the key functions which are core to providing correspondent bank services. Our paper further unpacks where each of these functions sit within an organization and how it contributes to the overall efficiency, before sharing what we've identified as best market practices. On the next slide, we will define the traditional model. So the traditional model is a byproduct of ensuring that cross-border payments can be facilitated easily and safely. This includes setting up traditionally reciprocal nostros and vostros accounts and using secure global messaging networks such as SWIFT. Many of the challenges faced over the last decade, especially heightened concern around anti-money laundering in high-risk countries, have driven banks to focus on scale-based cost efficiency and emphasize the compliance efforts. Some of the residual concerns can be further mitigated by way of the operating model and its respective functions, which I will now pass over to my colleague, Serena, to address on the next slide.
Thanks a lot, Audrey, and thanks to everyone who has connected for this webinar. And of course, I will go on from now. As Audrey mentioned, correspondent banking enables cross-border payments, foreign currency transaction, and international trade, relying on a specific range of interconnected functions that can be categorized differently depending on several variables. While client-facing teams like relationship management and product specialists that we may consider as front office focus on business development and servicing, critical compliance and operational processes typically sit within the second and third line of defense. Compliance, which is usually part of risk or a standalone function, oversees KYC, AML, and regulatory reporting. Legal instead is also often a centralized function and manages contract, legal, risk, and regulatory interpretation. Operation and product management, typically considered as middle office, focus on implementation, efficiency, and the integrity of payment processing systems. Together, these functions form the backbones of correspondent banking. Where these functions sit, their impact on efficiency and profitability, together with their cost and the impact on client experience, make the essence of the correspondent banking or their operating model success. In the next slide, we will also see our methodology. We decided from the beginning, in agreement with our sponsor and mentors, to delineate a very specific scope for this analysis in order to have more meaningful and applicable results. Our analysis focused on leading players active in the correspondent banking network, providing clearing services for euro and dollars and other few currencies through SWIFT. Our analysis is based on a qualitative methodology with over 24 anonymized bilateral interviews with directors and senior executives overseeing various aspects of the correspondent banking life cycles for clearing services. These interviews lasted between 30 and 45 minutes with open-ended and more specific questions to investigate detailed insight regarding the institutional structures, operational challenges, and strategic priorities. The bucket of participating institutions, as you can see in the slide, included 46 global banks, 37 regional banks, and 17 key local players. For the purpose of this study, global banks are defined as those offering clearing services in 5 or more major currencies and facilitating broad currencies access via nostro agents. In contrast, regional and local banks are characterized by their focus on domestic or regional clearing services with limited foreign currency reach and a strong emphasis on local market operation. I will now leave the floor to Eric for the various results and outcomes of our analysis in the next slide. Thanks.
Thank you, Serena. So here, ladies and gentlemen, this page you can see on the screen is the central idea of how we had rationalized the correspondent banking operating model. It's the framework that binds together the 22 pages of findings in our white paper. There are two angles to this. Governance structures on the left is the strategic aspect defining ownership and management of the entire correspondent banking pillar within a bank. It's coming from a product owner or the buy side's perspective, looking at which function in the bank owns the correspondent banking selection process, such as issuing or mandating RFPs, reviewing current correspondent banking partners, considering reciprocity, etc. Now, on the right, it is the operating structure, focusing on the tactical organizational design of how correspondent banking functions are assembled to work together on a day-to-day basis, giving you insights on how banks are structuring the correspondent banking umbrella, whether onshore versus offshore, or having dedicated versus shared teams across LOBs, etc. So let us handhold you through these concepts separately on the next slide. Governance structures. There are two types of governance structures, vertical versus horizontal. Look at the first pie chart on the right. Most banks we have interviewed are on a vertical governance structure. It means individual functions have the authority to make correspondent banking decisions based on their own requirements. Example, product management teams in several regional banks, they could choose correspondent banking partners based on their own needs to expand offerings. Operations teams in some regional banks has the final say in the process for banks that focuses more on cost and servicing. So this structure is more commonly seen in regional and local banks due to its agility and clearer ownership. But we heard setbacks from bank-wide synergy perspectives with cases up to thousands of standalone correspondent banking relationships, which becomes a huge cost burden down the line. Now, on the other hand, horizontal governance means having a shared function that manages correspondent banking for the bank, usually seen in global banks with network management, but how these teams are structured differ drastically depending on the bank's strategic priorities. We've seen innovator banks with network management rolling to the product organization. We see banks with high volume and multi-currency offerings having a network management team reporting under operations. And also a small set of banks, they have network management covering not just correspondent banking, but also vendor relationships for process standardization and global risk control. This structure works really well for global banks because they operate on a large scale and cost efficiency is critical. But there are setbacks too, relating to the lack of ownership and also potentially lack of domain expertise. And adding to these complexities, further nuances include centralized versus decentralized and HQ versus regional hub managed or governance structure, which we have covered in details in our white paper. But one intense debate is whether reciprocity should play a role in correspondent banking governance. After all, it was the foundation concept of correspondent banking in the first place. Now, only 17% of the banks that we interviewed, they run on independence principle. Those are global banks with high bargaining power, so they don't really need to rely on reciprocity. But 83% of the banks, they still do. But is there the most effective reciprocity model for correspondent banking governance? We actually have explored that in our white paper. So I'll leave that as a cliffhanger. Now, on the next slide, let's look at operating structures. This is just three things, very simple: vertical, hybrid, horizontal. Essentially, we examined whether all functions roll under the correspondent banking line of business with the full value chain ownership, or whether there are certain back office functions that were shared with other lines of businesses, or whether all functions they are actually shared with no dedicated teams looking at correspondent banking. The reality is banks are so different that there's not a one-size-fits-all operating structure. While I can tell you that most banks, they do run on hybrid, it's more helpful if I show you the cost efficiency analysis for the key functional components. Referring to the matrix on the top left, most banks believe that product and network management, they're the most efficient and lowest in cost intensity for obvious reasons. Now, client coverage and sales being in the middle due to the difficulty in terms of assessing the qualitative performances and the people cost. But IT operations compliance, they're the most expensive functions, with IT being slightly a little bit more efficient. Now, quoting some of the executives that we interviewed, EDD, KYC, they're obviously the largest in terms of cost, and that the cost from compliance and IT-related staff, they took up the majority of the budget. Now, that's why when you look at the bottom left graph, you'll see that the highest components quoted by the number of mentions, compliance people, operations, they stood out, followed by IT and product management. What's worth the redirecting your attention is to the pie chart. 58% of the banks, they admit that they have low visibility into the bank's cost structure, be it fixed or variable cost, And this is a major issue relating to platforms, which my teammate Shannon later will talk a little bit more in details. With that, I'll pass the time back to Serena to tell us a little bit about the future of correspondent banking.
Thanks a lot, Eric. And it's me again speaking about how industry leaders envision the future of the correspondent banking operating model. I think there are three words that are pivotal for the future, which are cooperation, flexibility, and investment in advanced technology. Cooperation between all players will be key to success, having a very important impact on the correspondent banking network ability to deliver faster, cheaper, and more transparent payments. Flexibility of the model and a more modular approach will be pivotal to achieve agility and market reach. Regional and local correspondent banks may have the upper hand in this, as their operation can be isolated to a smaller region with more manageable systems. On the other hand, large multinational and global correspondent banks have adopted an operating model utilizing strategic hubs for some components, such as operation, compliance, and KYC, to accommodate their large footprint and structural complexity, breaking down the whole system in specific silos. Some of these models have proven to increase client satisfaction and efficiency. Needless to say that investment in advanced technology like AI, machine learning, and distributed ledger technology will be a necessary step ahead on the path to operational efficiency, reduced cost, and enhanced revenues opportunities. These recommendations do not come without challenges in terms of implementation timelines, available resources, and budget prioritization, among others. Indeed, execution is another challenge by itself. However, if integrated strategically and affordably in the business plans, these recommendations should serve as a compass for banks to set their own specific targets to shape and enhance their correspondent banking operating models for future sustainability and competitiveness. I now leave the floor to Renan for the final remarks.
Thank you, Serena. On the next slide, please. All this information can be summarized from a concept presented in BAFT European Bank Forum held in Amsterdam earlier this year. In Jean-Francois' panel with Elena Hargas, the 5 components to review the most efficient corresponding banking model is called the 5 Ps, which is product, process, policy, platform, and people. Product is the client focus category, producing the most value to its customers. We noticed that larger banks have a scale and they're focused on financial hubs, while the smaller players focus on a niche market and tailor-made solutions. Then platform is also a category focused on customers. What kind of platform that we need to have in order to be user-friendly and technology advanced is also a key advantage. Process, when onboarding a client, how can we complete compliance and legal process at a reasonable and efficient time? Policy is constantly changing, so just by the different regions we operate, so how are we up to date? And lastly, and most important category is people. How do we train our people to be updated to the market changes? And how do we develop their skills and ability not to only take, but also manage risk? Ultimately, we invite you to download our white paper in order to attain further information and a deeper dive analysis, information that you may find useful. But before we move on to the Q&A, we also like to thank BAFT for this opportunity. Our mentors, Yasmin Oskan and Sabi Richer, our sponsor, Jean-Francois Mazur, our own financial institutions for the nomination in representing them, and all the industry leaders who took their time to do our interviews and complete our surveys. So thank you.
Thank you, everyone. We'll now move on to the Q&A.
I don't think we have any questions on the Q&A, but if you want to address anything, thank you very much for the team. This was an amazing presentation. For everyone on the line, please remember to download the paper. It's available to all the members, and I don't think we have any questions. So thank you. You want to address anything in particular?
Yeah, so Daniel, I know that we had a couple of questions still outstanding from the Global Annual Meeting. I believe there's one in particular relating to the modular operating models, which were referenced in our paper. So if you'd like to kick off with that one.
Yes, sure. I think that question raised as what does a modular corresponding banking model look like in practice? Well, I think in practice, a modular corresponding banking model is really about flexibility. Instead of relying on a single system where everything is tightly integrated, banks can plug and play the services they need with modular setup, whether that is KYC, post-transaction monitoring, payment processing, simply by using their own system module or integrating third-party solutions through APIs. In terms of benefit, I think that is quite clear. This approach makes it much easier for banks to adapt and choose what works best for them. This is a big advantage, especially for regional and local banks that are looking for cost-effective and more flexible solutions. And because everything doesn't have to be rebuilt from scratch, they can quickly keep up with evolving industrial trends and regulatory changes without having to overhaul the entire infrastructure every time something changes. Thank you.
There's a question in the chat, and how do you see the role of AI in snoozing correspondent banking business across the borders? Anyone wants to take that one? Hello. I think I don't know if we got the question on the chat. If anyone wants to take the role of AI.
Maybe I'll address a little bit on that because I was trying to find a chat room. So the role of AI when we're looking at the paper, so it's particularly highlighted under the section where we cover the future of correspondent banking. And the AI part is not really the future per se, because correspondent banks are already using AI currently. It's just about the level of different sophistication of how they're using AI that's really going to differ in the near term, we believe. So we see that they've already leveraged AI for self-serve tools that looks at, primarily servicing or just, addressing queries, looking at gaps, potential areas to issue RFPs on. We see use cases like those, but then there's also some, future that's on the outlook side of how to leverage AI for correspondent banking, such as could that potentially replace servicing altogether through, chatbots or just virtual agents, so to speak, or whether they can establish agents and look at AI to analyze further trends for product development so that they can address more sophisticated potential corridors or even particular areas of, correspondent banking. So a lot of outlook aspects to that in the white paper. So I think it's worth checking it out. It's also a pretty lengthy session. We deliberately put a lot of time on that. Apart from AI, there's all the other new stuff that you will hear about, tokenization and all that. So go check it out.
Yeah, I'd also just quickly add there as well that it can identify key risk parts of the onboarding process, as well as, automating certain pieces of KYC and AML. It doesn't necessarily, AI doesn't have to come for everybody's jobs. I think it will more just enhance automation and kind of allow banks to scan large language documents quickly, even if they're unstructured, and allow for a client onboarding process to be much smoother.
Okay. Thank you, team. We got another question, but we have to move on to the next team. So thank you very much for everybody. Make sure you download the white paper. So now with the BRICS team presentation, I will also share their video.
How about BRICS? The BRICS states are like 6 of them.
As its founding members, Brazil, Russia, India, China, and South Africa were joined by Egypt, Iran, the United Arab Emirates, and Ethiopia. More than 30 countries have expressed interest in joining BRICS.
President-elect Trump is vowing to impose 100% tariffs on BRICS nations unless they commit to not developing a new currency. Can the BRICS countries challenge the dominance of the US dollar?
Russian authorities are keen to promote the idea of a unified BRICS financial system to rival the dominant US dollar.
Well, Russian President Vladimir Putin and his BRICS partners want to do just that.
Russia proposes to use some kind of new currency, which could allow national currencies to be converted into a new unit of payment.
They're a BRICS nation?
What?
They're a BRICS nation. You know what a BRICS nation is? You'll figure it out.
Hello, everyone, and thank you for tuning into our webinar today. Today, we are diving into the fascinating world of BRICS, which is an informal alliance to promote cooperation among its country members, as well as to increase political influence on the global stage as a collective group. This group has big ambitions. They're building a new payment system that expected run parallel to SWIFT, as well as developing a new settlement currency to challenge the dominance of the US dollar in international trade. The BRICS nations are looking to push status quo in cross-border payment and trade that exists today. But the question begs, how will these initiatives impact the transaction banking industry? How do we get here? And frankly, why should we care? We will explore these questions and provide some insights into both the challenges and opportunities that comes with these initiatives. But before we dive in, I think it's important for us to understand the history of BRICS. And with that, I will pass the mic over to my colleague Olivia to talk a little bit about the history of BRICS.
Great, thank you, Kevin. So I'm going to take a step back and begin with a fun fact. So although, as you can see, the official establishment of BRICS was in 2009, the acronym itself comes from a research paper written in 2001 by the then head of global economic research at Goldman Sachs, Jim O'Neill. So what really is BRICS? And who is a part of it? Well, in case you didn't catch this from the video, it stands for Brazil, Russia, India, China, South Africa. And after 13 years without expansion, membership grew within the last 2 years to include the UAE, Egypt, Iran, Ethiopia, and more recently, Indonesia. This now makes it a group of 10. So currently there are over 40 countries who have expressed interest in joining this bloc. But to go a bit further into the why behind this formation, well, it's an alliance that was established with a common purpose for multilateral cooperation to address key global issues affecting member countries, along with shared interests and objectives aiming to improve their economies. Now that you have a brief understanding of BRICS history, Genta is going to take a deeper dive into one of the bloc's initiatives. Next slide, please.
Thank you, Olivia. So one of the main initiatives of the BRICS is BRICS Bridge, which is a proposal from BRICS countries aimed at developing a financial messaging system. This initiative was announced in 2023 during the BRICS Summit in Johannesburg. Unlike the BRICS Pay, which is a digital payment system, the BRICS Bridge remains in the early stages of development and still does not have an operational platform. This system is expected to be blockchain-based, possibly similar to the mBridge project, which was launched by Bank of International Settlement, and it may allow payments in local BRICS currency or into a shared and unified currency such as the unit, which we will be explaining in the second part of the presentation. A significant milestone was reached on February last year when the central bank governors and finance ministers of BRICS countries met. They agreed to start working on alternative financial infrastructure. However, no official launch date has been set yet, and majority of the BRICS countries, they still use SWIFT for their transaction. The key objectives of the BRICS Bridge include strengthening and enhancing financial sovereignty, lowering transaction costs, speeding up settlements, and increasing transparency and security by using technology. While it aims for inclusivity, there are also some challenges. BRICS countries, they do differ in their technological readiness. We have, for example, China, who is leading in the digital payment, while others may lack in the infrastructure. There are also legal and regulatory differences, and there are also concerns that the dominance of one member, it may create new imbalances within the bloc. Yet, if these challenges are addressed, then the BRICS bridge could become a transformative force, reshaping the global financial landscape into a more multipolar system. Now, Carlos will walk us through the short and long-term impact that the BRICS bridge might have.
Thank you, Genta. As you can see on the slide, while making a research for this paper, we asked 195 transaction banking industry members for their views on a number of BRICS initiatives, including BRICS Bridge. Most industry members surveyed for the paper believe BRICS Bridge and SWIFT, the current dominant payment system, can coexist and have a complementary relationship rather than a negative or a conflictive one. The success of BRICS Bridge will depend on a number of factors, being the market confidence and trust the most important one. If BRICS Bridge has to be able to prove itself as a viable payment messaging system to market participants in order to be a successful initiative, the global economic conditions, such as the relationship between BRICS countries themselves, as Genta mentioned previously, there are some imbalances right now between the bloc, and the evolution of the interrelations of BRICS with the US and other Western economies. This is a key point of divergence among BRICS nations as of today, with India and Brazil having a more neutral or positive stance to the US and the West compared with Russia and China. The regulatory environment will be the third key factor, how the regulations and the market receives BRICS Bridge, and how able are banks to interact with this new payment system. In the short terms, BRICS Bridge could function as parallel to SWIFT. For banks, this likely means operational fragmentation, as supporting both systems will for sure drive up IT and compliance costs. US and European banks may face additional pressure to limit its exposure to this new payment system due to potential sanctions risk. In the long term, the success of BRICS Bridge hinges on two factors: the integration with other non-Western payment systems, such as China CIPS, and the corporate adoption, although market trust barriers are expected to remain significant. If BRICS follows the example that Genta mentioned before of Bank of International Settlements' new payment system, mBridge, central banks could play a significant role, potentially marginalizing commercial banks in cross-border flows. Now that we have discussed the main points about BRICS Bridge, my colleague Yang is going to talk to you all about the unit. Please, next slide.
Thank you, Carlos. Now let's shift the gear a little bit from the payment system to the currency. So besides BRICS Bridge, one of the ambitious proposals under discussion by BRICS nations is the creation of a reserve currency named the unit. However, unlike traditional reserve currencies, the unit is expected to just function as a unit of account rather than traditional fiat currency. As for why the unit is being pursued, here's a few reasons which you can see on this slide. The unit may potentially reduce dollar dependency, enhance economic sovereignty, facilitate intra-BRICS trade, and also may potentially challenge Western financial dominance. Now, after the introduction, both BRICS Bridge and the unit may sound very fascinating and promising to you. However, when people took our survey and were asked about whether the proposed BRICS Bridge and the unit will help BRICS de-dollarize, the results our team received are actually not as optimistic as you may expect. So we may start wondering, what's the unit's actual impact on financial industry, and how will the unit evolve tomorrow versus a decade from now? To unpack this, I'm going to hand it over to my teammate, James.
Thank you, Yang. So in our paper for the BRICS unit, we did a bunch of research, and the conclusions are kind of organized more in the short term to long term. So there's a lot more depth in there, but I'll just cover a few of the main considerations at this point. So right now, the unit is more of a geopolitical statement than a functional monetary instrument. We don't expect any changes of this status quo in the next 1 to 5 years. And the main reason for that really is that the Western institutions would be cautious to engage with the unit due to sanctions risks. So whenever there's a new currency, we're seeing it right now with cryptos and stable coins and that, it takes a long time for the regulation and to get banks comfortable. However, one place where we could see it used would be as a special purpose instrument. For example, a tokenized asset to settle select trade transactions, particularly among the member nations of BRICS in specific trade corridors. Shifting to the long run, the success of this currency would hinge on two main factors. One being the political alignment among the member states. So we see that in the news, India, China. There's a lot of infighting among the BRICS nations, despite the fact that they have this BRICS initiative where they're trying to come together, right? And then the other one would be more broader acceptance in global trade. So, for example, if we see it starting to be used as that tokenized asset in the short to medium term, maybe some other countries start to get interested in that and want a piece of the pie. So I guess the more likely outcome that we've seen from our research at this point in time is a multipolar currency system where the unit coexists with the US dollar, the euro, and the RMB in specific trade blocks. Those other currencies are already popular, so perhaps we could see the unit coming into play and taking a specific slice of global trade. So if this was to occur, then banks operating in the BRICS markets, they might need to start holding reserves of the unit for certain transactions. So if that started to happen, then yeah, we could definitely see the unit start to take off, and then banks starting to participate more globally. And with that being said, we interviewed a number of industry experts, and they were a little bit skeptical that the unit could rival the US dollar or the euro as a global reserve currency. So our paper kind of looked into that and tried to see if that was a reasonable outcome. So all of the research you'll see right now online is pointing to that not being very likely. And then speaking to the people in the industry, they also agree with that sentiment. And one of the main reasons for that too is if the unit lacks convertibility or has limited adoption in the short run, it's going to constrain its utility, and then it will be limited to those niche trade corridors I mentioned, rather than broad international use. And it's kind of difficult to get out of that if that does occur in the short term. So on one hand, you have that being something that they need, but on the other hand, if it doesn't start to get that global adoption, that could constrain its utility. So I'll leave it there for the unit, and I'll hand it over to my colleague Taps to discuss more broadly what the potential impacts of BRICS are in transaction banking. And Daniel, can you please move to the next slide?
Thank you, James. So in terms of the potential impact of the various BRICS initiatives on the transaction banking landscape, the first is from a currency and settlement perspective. So we may see reduced use of the US dollar in terms of trade between BRICS countries. This will most likely usher in a new FX corridors, which will increase local currency settlement, as well as alternative payment systems may come on board. This will require new compliance standards to account for these new platforms in terms of payments and clearing. From a trade finance perspective, we may see new trade finance products denominated in the BRICS unit or local BRICS countries. This will might have the potential impact of increasing trade amongst BRICS countries, as well as a growth in localized trading hubs amongst BRICS member countries. From a liquidity and cash management perspective, banks might need to introduce new FX hedging tools for these non-major currencies that will be used to facilitate BRICS trade, which also require multi-currency liquidity solutions as well, which may fragment liquidity pools. From a regulatory and compliance perspective, there may be more compliance cross-border obligations on banks, as well as an emergence of regional anti-money laundering and KYC standards that may need to be accounted for. So banks would need agile compliance systems needed to have that regulatory flexibility.
We may also see new correspondent banking relationships emerge from the traditional ones to account for this trade, for intra-BRICS trade. And then lastly, banks will need to increase their investments in technology, which obviously increase the technology stack and complexity as well. I'll now hand over to my colleague Sarai, who will conclude our presentation. Thank you.
Thank you, Tapiva. Daniel, maybe we can move to the next slide. Thank you. Before we conclude our presentation, we would like to highlight the role of industry leaders in BRICS initiatives. Today's presentation has clearly shown that we are entering an era of coexisting systems, where influence is becoming more distributed and at the same time more contested. In this context, BAFT and the banking community will be crucial in navigating these changes and playing a key role in several areas. First of all, setting global standards will be essential. It is our responsibility to have defined frameworks that are secure, inclusive, and adaptable for the evolving realities of cross-border finance. On the other hand, promoting strategic partnerships and collaboration will be equally critical. This involves not only established institutions, but also emerging actors and the regions that are increasingly active in redefining financial engagement on the global stage. This relationship may be complex, but they are vital to advancing shared goals of financial stability and mutual growth. And last but not the least, collaborating with policymakers and influencing change through education and research will be also fundamental. Every shift in the financial system introduces uncertainty, as my team elaborated, from regulatory divergence to infrastructure limitations. And banks are uniquely positioned to bridge those gaps. With shifting alliances and emerging financial architectures, the role of banks is no longer reactive, but it must be proactive by means of shaping the path ahead. As we end our session today, let's consider some open questions for the future in BRICS. Will global partners trust the institutions behind BRICS initiatives? Or will corporations and banks rewire their infrastructure to accommodate these changes? But most importantly, can BRICS countries convince the world that its alternatives are reliable, secure, and in everybody's mutual benefit? While these questions may not have definite answers, but they are crucial considerations in shaping the future. So thank you for participating in this webinar and your interest in this topic. I will now handing over to the team for a short Q&A in the last couple of minutes that we have, if we have something in the chat. Daniel, over to you.
Yes, we have a couple of questions on the chat. One of the potential on which technology BRICS bridge will run. Do you want to say anything about that? And the other one is based on current known political and other challenges. Is there any target date BRICS is targeting to come into real existence?
Okay. I can take this question. When it comes to the BRICS bridge, the system is expected to be blockchain based. And when it comes to the target date, there is no specific date. Because it's still on the early stages of development and it is not operational yet. And when it comes to the unit, maybe one of my colleagues can, I think also James mentioned during the presentation.
Sorry, Gentiana, were you referring to the unit?
Yes, I think because as far as I understood the question, it was for the two initiatives, right? Mm-hmm. So when it comes to the BRICS bridge, it's still not, it's in the early stages of development and there is no launch date.
Yeah, I mean, it's very similar for the unit, right? So
Yes.
the unit right now is a conceptual framework. We would anticipate that it's a digital currency, particularly because the use cases that they're exploring are for use in trade at this moment. But as of this date, you are seeing a increase in non-US dollar denominated trade between BRICS countries. And so that's probably the more likely scenario in the short to medium term, that there's just going to be a shift away from US dollar denominated trade between BRICS nations, and less so around creating an actual currency. And sorry, maybe just another thing on the other question, which was around when BRICS will actually happen. So like, you know, BRICS has already happened. There are many meetings that happen with all the BRICS nations. Their membership is expanding. The amount of trade that we're seeing between BRICS nations, all the economic indicators are showing that those are increasing as well. You have things like the new development bank. You have other initiatives where they're issuing green bonds. And so all of that stuff is in the paper. So I would point to our paper because it does give a good overview on the history of BRICS, what current initiatives they've established, and where the future will be. And then the more interesting stuff, kind of what we were covering on this paper, like the new trade platforms or perhaps a currency, that stuff is all detailed within the paper.
Thank you, James. And any other questions you want to address that's in the chat, since they're not in Q&A, please feel free. There's some mitigation questions, and we still have a couple more minutes. Okay. Thank you, team. I think with that, I mean, unless you want to, we can address those questions later. I mean, please make sure to download their paper that's available. And I want to just remind everyone that we also have next week another session on the Future Leaders Program that will be focused on cross-border real-time payment and AI threat vectors of fraud and trade finance on also Wednesday, June 25th at the same time. And on the next day, on June 26th, there's a different webinar on the current state of correspondent banking and trade finance in Latin America and Caribbean. I think with that, great presentation. Thank you very much, the team. I'm looking forward to next week, and I think I'll give you back a couple minutes.